Ekovest's subsidiary Ekovest Construction has been appointed by Malaysia Rapid Transit System as the collaborative partner to Adil Permata, the main contractor of the Rapid Transit System RTS Link project. In a bourse filing, it said Ekovest Construction has accepted the 1.98 billion ringgit contracts from Adil Permata, making it the project's engineering, procurement and construction contractor for the railway shuttle link. The group said this will replenish its construction order book and should contribute positively to its financial performance. RTS Link is a railway shuttle line of about 4 kilometres between Bukit Jaga in Johor Bahru and Woodlands in Singapore, capable of ferrying 10,000 passengers per hour per direction. The link would be a modern light rail transit system that will provide high-volume, fast and efficient transportation between the two stations, providing an alternative means of transportation that will help alleviate the congestion at immigration checkpoints for both countries. It is slated to be completed by the end of 2026. Shares in Ekovest closed unchanged at 40 cents, giving it a market capitalisation of 1.08 billion ringgit. The Malaysia Competition Commission, or MyCC, says 8 companies have been fined a total 1.55 million ringgit for bid rigging activities in 4 IT-related contracts. MyCC CEO Iskandar Ismail told the press today that the contracts, procured by the National Academy of Arts, Culture and Heritage of Malaysia Aswara, were worth a cumulative 1.93 million ringgit and tendered in 2015 and 2016. He said the investigations were prompted by a tip-off by Aswara after IT company Calibre Interconnects brought along a representative from rival Tuah Packet to a project briefing for a tender that Calibre had won in 2016. Upon further digging, Iskandar said, MyCC unearthed 2 separate cartels that were involved in the matter. Calibre and Tuah Packet aside, the other companies involved are Novatus Resources, Aleran Digital, Viamed, Silvertech Synergy, Venture Nucleus Malaysia and BaseNet Technology. The 8 firms will likely be the first to be blacklisted from public procurement for up to 5 years, under a circular by the Finance Ministry which came into effect on June 1st. In the meantime, Iskandar said the competition regulator is still investigating 500 companies suspected of being involved in rigging the bidding process of government contracts worth 2 billion ringgit across industries. Kenanga Research believes that telco players will accept equity participation in Digital Nasional Berhad or DNB, as they cannot afford to sit out the next big evolution in the digital-based economy driven by the 5G technology and the 4th Industrial Revolution IR 4.0. It also did not rule out the possibility of large mobile network operators or MNOs being granted greater equity participation in DNB in exchange for their unwavering support for the single wholesale network SWN model. The remaining question, it said, is the quantum of equity participation of Celcom, Digi, Maxis and U Mobile in DNB. The research house added that while concerns have been raised over DNB's wholesale fixed capacity charges to support its bond-raising requirements, it does not expect a material increment in the telco's total outlay to DNB. It added that the cost, funding structure and timeline would probably be revised by the MNOs, which could influence DNB's pricing mechanism, procurement strategies and cost management, benefiting the MNOs in the long run. Plus, the MNO's commitment to DNB's equity participation could boost DNB's credit rating in its bond-raising exercise. Kenanga raised its rating of the sector to overweight from neutral and said its top picks are Digi.com with a target price of 3 ringgit 70 cent and Telekom Malaysia, target price 6 ringgit 70 cent. Proton Holdings is aiming to resolve outstanding orders for 90,000 units of its vehicles by the first quarter of next year, following the end of the sales tax exemption on June 30th. Proton Deputy Chief Executive Officer Roslan Abdullah said car buyers rushed to take advantage of the tax exemption in the final week. boosting bookings of the national car by 300% compared with weeks earlier. According to him, Proton received 150,000 bookings in the first half of the year, with 60,000 of the orders having been handed over to customers. The car maker is targeting to resolve this backlog within the next 6 months or by the end of the year, and there may be some earlier deliveries depending on the models. At the latest, Ruslan said, Proton hopes to deliver any outstanding bookings by March 31st, 2023. Ace market debutant Argo Bio Holdings plans to raise prices to maximum levels to improve its gross profit margins amid a drastic increase in material and packaging costs. Argo Bio Chief Executive Officer Ian Yong Hian Boon cited as an example the more than 40% year-on-year rise in the cost of non-dairy coffee creamer, one of the most important ingredients used by the instant beverage premix manufacturer. He said the company has begun passing on the higher material costs to its customers by gradually raising selling prices with 3 months advance notice. Argo Bio's profit after tax, or PAT, stood at 5.5 million ringgit on revenue of 32.7 million ringgit in FY18, followed by 2.3 million ringgit PAT on revenue of 31.7 million ringgit in FY19, 5.6 million ringgit PAT on revenue of 39.4 million ringgit in FY20, and 7.6 million ringgit PAT on revenue of 59.1 million ringgit in FY21. In the first half of FY22, PAT shrank to 2.7 million ringgit on revenue of 34.8 million ringgit as raw and packaging materials costs rose. Argo Bio's shares opened at 36 cents this morning, a 16.13% premium over its listing price of 31 cents. It closed at 34 cents for a market value of 84.28 million ringgit.